My beautiful friends, we are here together at last once again. All right, it is Monday, June 24, 2019, and again, we have to talk. Let's start off with the basics. As I am doing this video blog, stocks are higher across the board, but not by much. Nothing major is going on. However, I want to show this to you. This is the bond market, and again, you know me. The first thing this guy here looks at, I look at the bond market. I look at the 10-year yield more specifically, and I want to show this to you again. Let's look at the non-existent yield curve. Look at the 1 month. I mean, it's unbelievable. The 1 month, think about what I'm about to tell you. The 1 month is yielding more, well, than most of the entire curve. It's incredible. It really is. Let's go to the 10-year. Okay, you can see the 10-year is lower than the 1 month, and the 30-year, we are now at 2.55. We were at 2.65 just a couple of weeks ago. As I've been explaining to you, the long end of the curve is going to continue to drop regardless of what the Federal Reserve does. It's an incredible environment. It really is. Now, you've heard me explain to you for quite a while, stocks are going up, 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 and that's exactly what they've been doing. I've been explaining to you the crude oil, up, 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 up. That's exactly what it's been doing. We already surpassed my Bitcoin target of 10,000. I've been explaining to you how you need to hold gold and silver. They've been going up here, even though the prices have no bearing whatsoever on reality. I explained to you how the hard asset derives value from the derivatives, completely rigged. Okay, there is a big risk here in this market, and I'm gonna put a little perspective on this for you. The market, in my view, right now, judging or gauging from the bond market, is saying there is not going to be a deal with China. Despite beautiful letters and everything else you want to talk about, it's just the market doesn't believe it anymore. What does it mean? Once this becomes real, this week, I mean, this is the week that everyone's been anticipating here. If there is no deal this week, the market is not going to like it. Now, I am not saying this is a market top and the market's going to crash here, okay, because I always get that. I am saying that if a deal is not achieved this week, the market is going to take a hit. How much of a hit? Easily 10%, 15%. I wouldn't be surprised to see 20% in an extreme case. But let's back up a little bit. What do we know is going on in the background or in the forefront? The Federal Reserve, all the world central banks are about to go nuclear. They're about to go nuclear. So that's going to support the market regardless of what may or may not come out of a China deal this week. I don't think it's going to happen. I really don't. So what I would prepare yourself for at this point is for the market to give a little bit back and then go higher. All right? So we can capitalize on this beyond any shadow of any doubt. I have all of my free publications, my free trading platforms. Go to my website, traderschoice.net. There is a link in the description of this video. Everything is free. Free. Take advantage of it. I think there's a lot of opportunity here for my lions. If this, no matter what happens, there's going to be opportunity here. But in the event, and I think the odds are right now against a deal with China, the market's not going to like it. Something could change and we can get a great deal. I hope that's the case. Okay, I really do. But right now, the debt market is saying no. And I have to say this, the debt market is never wrong. It's never wrong. So again, how can we gauge moving over the next several days? Watch what the bond market does. If you see yields dropping, continue to drop, that's a sign that no deal is coming. If you see yields start to rise, 10-year yield more specifically, that means the market is kind of saying, hey, hold on a minute, maybe a deal is coming. So forget the damn stock market, because that's where everyone wants you to look. You got to be watching the debt market morning, noon, and night. I'm not kidding. Morning, noon, and freaking night. So there's where the tell is for me, and it should be for you as well. So with that said, I think that's the foundation here for the next several days. Let's see where it goes. Let's see. I think tomorrow we're going to be hearing from the Federal Reserve. Some Fed presidents are going to come forward. What they say is going to weigh on this market, and in my view, they're going to blow sunshine straight up the crack of this market like you cannot believe. It's all about keeping the stock market elevated despite what's happening on the ground. You know that. The setup here is pretty simple. Again, it looks to me, gauging from the bond market, China deal isn't going to happen, but world central banks are going to step in here, especially the Fed, and prop it all up. If that means the New York Fed, who has their own trading desk, is going to buy stocks, that's what they're going to do. Mnuchin's 6 banks, the largest in the world on Wall Street, they're going to buy stocks too. So, yeah, I anticipate that the market would take a hit here, but it would be temporary. I don't think this is going to be a top no matter what happens, because again, every effort you can dream about, think about, and imagine is going to be put forth here to keep this market propped up. Why? It's an election cycle, and that's the game they play. Just be ready, and we will talk about this moving forward. All right. With that said, I'll see you later. Love you a lot.